Hello, I'm Hayley Cheever and I'm a small business finance expert. Today I'm going to talk to you about the cash cycle for a small business. So what is this? Well, this shows you how much money and for how long do you need to wait from the point that an order is placed until the cash comes into your bank account for any goods or services that you provide. For any business, your aim in order to maintain a good cash flow would be to minimize this cycle time and the amount that's flowing through it. You want to identify if there are any areas where the cash is getting stuck or you're incurring abnormally high costs versus the final cash amount that you're expecting in. So, how do we calculate the cash cycle? Well, I'm going to go through with you a really crude method that I use, but it is good enough to give you a good indication and understanding of how your cash flows through your business.
So here I'm going to show you a visual representation of the cash cycle. And if you can use this picture and get it really clear in your head, I guarantee this will serve you well from when your business is very, very small, right up to when one day you may be a much larger business. And the objective is to try to calculate in terms of numbers of days how long it takes you to move from the top circle called order placed right through to the step when the cash comes into your bank account. And we break them down into these distinct steps, i.e. the time it takes or the number of days it takes from an order being placed to you starting to make it, and then the number of days from making that order to actually completing it, and then the number of days from completing it to you actually raising an invoice, and finally the number of days from raising the invoice to when the cash comes in. By breaking the stages down into key steps, it should be easier for you to think about each step individually. And then what you do is you simply total up the total numbers of days in each step. So here's an example. I've assumed that for this business, it takes 65 days in total to get round its cash cycle. Then we want to consider for this order, what were the direct costs of the order? Now, direct costs are things like raw materials or direct labour costs associated with that order. And in this case, it's £1,000. And then we add on based on a daily rate of your overheads. So in this example, I've assumed that the annual overheads of this company are £50,000. I've divided that by 365 and that gives me overheads of £137 a day. £137 a day multiplied by 65 days gives us a total overhead cost of £8,905. So adding those two figures together, the direct costs and the overheads, says that the total cash in the cycle for this order is £9,905. This business requires nearly £10,000 spare or in reserves in order to complete this order before it can then invoice the customer and collect the cash in the bank. You'll notice that the sales revenue for this business that it gets from this order is £15,000, but the profit of £5,095 does not materialise until the cash is received into the bank. So if you can understand what is your business working capital requirements, and remember these will change as your business grows, you will be able to avoid cash flow issues if you can always ensure you either have funding or sufficient cash flow reserves to cover this gap.